Hi guys, welcome back to the next video from JC Trading. Chris with you today. Just wanted to cover off a very common question that we get quite a lot, especially from newer traders. How do you place a trade on futures, whether it be the S&P or ES or NAS as I'm currently on my chart? The first thing we need to get on the chart are these two buttons here. There's a red button and a blue button. If you right click on the background to your chart and go down to trade, go down to trader settings, then make sure trading is selected over in this column of options, and you make sure you have a buy and sell tick. As long as the buy sell button tick is there, you'll have the buttons come up on your screen. So now we've got those, because there's two main ways that you're going to be entering a trade depending upon the strategy. First thing I want to cover off is contract size. So I'm currently on the E-mini, and you'll see a small number there in the middle that says quantity 1, and I can change the quantity here. That quantity of 1 on the E-mini means one contract, so that's $20 per point that I would either lose or win. Now a point, just to give you some perspective, if I come down from here, if you look at the three zeros, that will gradually get bigger as I move this down, or that number will. Obviously I'm coming down, so it's a negative, but it's ultimately the same thing. So that distance there is 10 points. Whether or not you've moved down or up, it's 10 points. One contract on the mini is $20 per point. So that movement there that I've just made, if the market went in my favour that distance, I would make $200. If it went against me for that distance, I would lose $200. So that's what the number is in the middle of the red and the blue buttons. The blue button is a buy button. That means you think the market is going long, you're going to be, so i.e. up. The red button, you're going to be going short because you think the market is going to be going down. I'm on a paper account, so this is not real money. Obviously I'm not trading a real account whilst trying to demonstrate this, because it could go terribly wrong. So with that in mind, the first way to place an order is simply to click on the relevant button, ensuring you've got the correct number of contracts based on your risk management. So if I think the market is going to go down from this point, I would click sell. So you now notice that I've got this block here that's got minus 15, it'll be minus 10, minus 20. This is the amount of in dollars that I'm actually winning or losing on the trade. So because I've gone for a sell, that's obviously we've gone short. We're expecting the price to come down. So the further this comes down, the more money I will make, and the bigger the number will show in this box. Now, say for argument's sake, you would like to have a safety net or a stop loss. What you would do is come over towards this pricing scale and just come off of it slightly, and as you move off of it, this plus appears. So let's say for argument's sake we don't want the price to come above this previous little high there. So we would click on the plus, and we want to put in a stop, because we're in a sell, so we think the market's going to go down. But what the opposite is to a sell is a buy. So we'll be adding a buy stop, and it literally just flew through it. So I'm going to need to do that again now. I'm just going to turn off these trade executions, because I think it will start to become quite confusing. So we'll try that again. Okay, I'm going to enter a buy this time for one contract. So we're in for one contract and we're making money. We've just made, we're up to $10, now $5. If you want to protect, say, this low here, and you're not prepared for the price to come down any lower than that, we've entered a buy. The opposite to a buy is a sell. So we will be clicking on the cross, exactly the same, go onto the pricing scale, come off it slightly, you'll get a plus. So click on the plus, and because we've entered a buy, we'll be looking for a sell. That's the opposite. We will enter a sell one stop. What that means is the moment this price comes down and touches this stop, that will take us out of the trade for that amount of loss. That loss is obviously how many contracts and how many points. So that is how I've set a stop, and I'm obviously in the trade. Now you might want to set a take profit as well. If you do want to set a take profit, exactly the same, come onto the pricing scale, come off of it slightly. Now this time we want to set a limit order, and we want to sell again, because the opposite to buy is sell. So this time we will place a limit order. Now when the price either comes down to my stop or comes to my sell limit, I will be out of the trade. Obviously I would rather it get to my sell limit, because that means that I was correct in my trade to buy, and I will be out for a nice profit. If it comes down here, that's going to stop me out of the trade, which would have meant that my initial trade concept was wrong, and I've obviously lost money. But that is how, or the first way to enter a trade. So this is called market. You're buying at market. You're buying at market or selling at market, or instant trading. So as you push either the blue or the red, you're placing an immediate buy or sell. So this trade I would then leave running. If I want to move this at any point, I'll just go over to it. You'll get a hand icon come up, and you can just click and drag this, and you can move it around. You can do the same for this. So say I've actually changed my mind and I want a tighter take profit, and I'm prepared to risk more on this trade for some reason, I could move that down. If I want to close the trade out and take my $95 profit, just click on the cross. That's going to close the position. But what you do need to remember is you've also then got to manually close these other orders that you placed. If you don't do that and you walk away from the screen for argument's sake, you could well be entered into a second trade that you wasn't planning on. So this stop, for argument's sake, down here, you would be placing a sell when you didn't have a buy active, so therefore it would become a sell. It wouldn't be cancelling out a buy. The other way that we can place an order is to set a limit order. So we expect price to come down to, say, this low. Click on the cross, and we would like to say we think it's going to go up, so we're going to place a buy. We're going long, so we will place a limit order at that point. So we haven't touched these buttons, we've just placed a limit order, still one contract. On that note, when you place any limit orders, or you're placing an order from this plus, it will put into the options whatever number you've got in the middle here. So if you do want to change the contract number for any reason, your quantity, come in here, click on these buttons there, plus and minus, or click on the button itself, and you can change the number of contracts. So let's say that I actually wanted to go 3 contracts on this, and I've only entered 1. I can just cancel that there, click on the plus, and this time it will say 3. So we've now got 3, and we're going to set a limit order. When the price comes down, what's going to happen is it will tag us into a trade there, and then hopefully, because obviously we've gone long, it's a buy, we're hoping it's going to come back up there, and then we would be taking profits. Now you can obviously manually close a trade at any point by placing an order for the opposite. So if price did come down here, started to go into profit, I didn't have any take profit, so I've got no limit orders set, I don't have a stop order set, it's literally just one order. With the buy I could just click sell. That's going to sell the 3, so in effect we're cancelling it out. We'd purchased 3, now we've sold 3 and we've got none left. That's one way to get out of the trade. The other one would be to do exactly what we've done last time, and that is to set another limit order. So we could set a sell stop here. Because we're buying at this point, we're selling, this would be the distance. Obviously that distance in points, $20 a point per contract times however many contracts you've got. We could also do the same with our take profit if we think we're going to come back up to there. So this trade now, it looks very much like the last one did, but we haven't actually been tagged into it now, or as yet, because we didn't use these instant buy and sell buttons, these market executions. So until price comes in and tags us in, this trade isn't live. It's not a live trade that we're either winning or losing money. It's just sat there waiting for price action to come down, tag us in. Once we're tagged in, as I said, hopefully it will come up to here and it will take us out of the trade. If it comes down here and tags us in and comes down to this, we're still out of the trade, but obviously we've lost that trade and we've lost that amount of money. They're the two ways that we use the market execution, or how we execute trades. One is limit orders, and we use those for our silver bullet strategy, and the instant executions or market orders we use for our inverse strategy, the FVG inverse strategy. We trade them both every day live in our Discord. It's a free group. You can speak, you can ask questions. It's a great group of like-minded people. We trade London Open, we trade New York Open, and we occasionally trade New York PM. It'd be great to see you over there. Any questions, drop them in the box below. If not, we'll hopefully see you in the group. Cheers, bye.